to Opening Bell. Enjoying my conversation here with Jay Woods, global strategist at Freedom Capital Markets. Last year, we gave him a lot of kudos for being the guy who called the year-end target as close as possible. We compare him to all these brokerages around the world, and you had it right. And so now, I think the cards here are a little tough to read the tea leaves at this moment, Jay Woods. What do you think?
Kidding. This is a market that is bending but not breaking. We are coiling in such a tight range. And then every time you think, okay, maybe this is going to break the market, we withstand it. It started with Venezuela, then we went to the SCOTUS ruling, now Iran. But this range feels as if something's going to give. Will the floor crack? It feels more that way to me, that we're due for a 5% correction in the S&P 500. Had it already in the NASDAQ, living through it now. So, yes, I still trade this market with caution, and I just look for pockets of strength because to come up here all bullish and rosy, given the backdrop of what's going on right now, it's tough to do. Earnings have been great. We have that going for us, but look at Broadcom. Broadcom's already starting to fade. I don't have a live update on it right now.
It was up 4.7% before. But what's interesting, as you talk about the potential, and right now it's up 2.6%. When you look at what's going on, and if we are to have a 5% pullback, that's not such a big deal at all.
3 times a year.
When you look, that is so not a big deal. Are you buy if you see that?
I am optimistic on a pullback. I'm just looking for that pullback, and we're not getting it. We've gotten it in some pockets. We saw software. We talked about the IGV ETF, what Microsoft went through. But they've given us buy opportunities. In fact, what we've seen in this market is rotation. The market was priced for this war. What sectors were leading? Defensive sectors were leading. Staples, energy, utilities. What has backed off this week? Those sectors. What has rallied? Technology, especially the software stocks. They've been leading the way. And then when you look globally, you see these foreign markets. We're talking about South Korea having its worst day in God knows how long. It was up over 200%. It pulled back 12 yesterday, and then we were screaming fire. But
it bounced back 9%.
It was up 10%. Had its greatest day since 2008 today. So it's a different market. The U.S. markets are structured much differently. The Kospi is 22% Samsung, so you're going to see more volatility there. But the point is gold, silver. Those things that did well are correcting, but they're supposed to do well in turbulent times. Well, now we have them, and people already had anticipated it, so we're selling off. We're rotating into some of the weaker stocks, like the software stocks. And
IGV is doing better this week. I actually, what caught my eye this morning was Salesforce. In fact, Salesforce right now is up 3.2%. The IGV is bouncing back, but they're not too far off the lows. So you would buy IGV.
Well,
that's one area, or on a pullback day?
I'm glad you stopped me, because I think this is more of a relief rally, and this will be the tell. These stocks still have broken major uptrends. They are guilty until proven innocent, meaning they are not safe to just jump back into. For the traders out there, which you have a lot of them, these have been great trades. I would start to fade this, especially the IGV as we get closer to 90. But those that bought, if you see this nice rounded top and you go back even more time, we held a key level. Now the question is, will we get that full recovery? I don't think we will.
We used to have a segment, right? Trade it or fade it.
Trade it or fade it.
Trade it or fade it.
I'm fading the rally in these software names.
Okay, what are you buying?
What am I buying?
How about metals?
Right now, I'm just kind of sitting on the sidelines. I've sold some of my energy positions. Not all of my ExxonMobil.
And you took some profit? Is that why? With the oil at $78.
And this is very tough, because I've seen the ball clearly, and right now the market is not giving us that sign that it's all clear. I do not think that this is the beginning of a bear market. We are still in a cyclical bull market, but we're in that resting phase with a little angst that could cause us to sell off. We haven't had the catalyst to go higher. We went through earnings season. NVIDIA didn't do it. Now I'm watching Broadcom, that price action, still very early in the day.
Yeah, and new leadership. It was very different than the leadership at Walmart, which they said just come in and don't mess it up. Versus Target, it was come in and fix it. And Target now at new 52-week highs recently, so you're on that upward momentum. Jay Woods, great to see you. Really appreciate it. Thank you. Jay Woods, Freedom Capital Markets. Good to see you.